this stage. Well, we've got, Raamdeo Agrawal, Chairman and Co-founder, Motilal Oswal Financial Services, now joining us. The 22nd Motilal Oswal Annual Global Investor Conference kicks off today. And Raamdeo, it's a pleasure. Good morning. Great to have you with us here. Lovely to see you. What's top of mind, Raamdeo, for you, for your team as you put this together, as you put this event together? What's really top of mind?
Yeah, Prashant, after 2 years of stagnation in the market, I think the blowout earnings season has started. We started with upwards of 20% kind of a growth across the kind of a listed space, and that is what is the main theme. I mean, how long market will take, how many more quarters it will take to stay here or below and not recognize the earnings growth. So that's the kind of a discussion. And a lot of earnings surprises have come in last week. So and they are blowout earnings, I mean 70%, 60%. So I think people are discussing whether it is right, it is sustainable, how secular it is. So those are kind of discussions. So earnings growth of this quarter is the main kind of a discussion point. And of course other geopolitical issues will come up. But right now I'm discussing in the morning about the earnings.
And we had Raamdeo Gautam who put out the numbers on Friday when he was with us. Some 32% earnings growth per small caps till that point. Nifty earnings some 15% growth. So what is your sense, if I ask you? Is this because the markets will price where things will be, not where things are, because where things already are, or earnings in the bag is already in the price. What do you think? Is this earnings reacceleration the start of earnings reacceleration, or this is kind of a one-off and you can't really bet on it? What is your sense?
My sense is this is start of a earnings acceleration, and this is the first quarter. So at least 4 quarters, in any case, it is going to be there because the base effect will be there. But my sense is that economy after, I think the policymakers have definitely dialed change with the GST cut from 28 to 18% and credit flow change from 9-10% to 17-18%. I think these are two things which I see as driving the entire demand structure and margin structure. So if we continue, I mean, of course, our GST now stays at 18. I don't expect any further cut in the days to come. But if you look at other high frequency numbers, your corporate tax collection is up 22-23% in the till 15th of August or something like that. And your GST collection is growing at about 15%. So I think economy is really rocking. Just that this geopolitical thing is putting pressure on the currency. So that keeps one of the very important participants, that is FIIs, at the margin. But otherwise, I think this is the earnings season which has started off very well. And my sense is it is going to go on till it is broken, in the sense that nothing goes on at 22% for a very long time. But my estimate is that for next 4-5 years, 12 to 14% kind of earnings growth we should sustain in Nifty. And Nifty earnings now, this year is going to be about 1,250 rupees. And next year it could be 1425 to 1450. So that's how things are shaping up.
Raamdeo, is this kind of an earnings growth a sufficient catalyst for us to break out of this consolidation range and markets give us a 15-20% kind of an annual growth? Because while this is firing, as you said, crude is still elevated. The AI trade globally, while it may have plateaued, it hasn't corrected, and the FIIs are still absent. So when you counterbalance the two, what kind of market returns should we expect?
Yeah, eventually earnings, the markets catch up with the earnings, whether in stocks or markets. I mean, yes, because of external fears, despite that earnings growth is coming. So business is doing well, economy is doing well. So markets can, I mean, the job of the market is to price the earnings. So they may be a little lazy, or maybe out of fear, they may get delayed by 6 months or something like that. But eventually, and first thing is that even the headline, this Iran war or whatever war is there, or geopolitical challenges, that also subsides. So the moment it subsides, the market just kind of overshoots. So we don't know when it will subside. It is said in the market that you know what is going to happen, but you don't know when exactly it is going to happen. So that's a That's the situation right now. Earnings will keep going from say 1150 to 1250 to 1450. So we know, I mean, markets cannot be ignored for a very long time. And you might be seeing FIs are already, their selling has already slowed down. So it's just a matter of time, maybe 1 quarter, 2 quarters, 3 quarters. I mean, maybe market will require another quarter of earnings confirmation that in Q2 also the earnings are growing at about, I mean, same kind of earning excitement is there of 15 to 20%. Once that is there, then I think markets will get into from a pessimistic zone to optimistic zone.
And do you see a continuation of the same themes doing well, like autos, for example, the data centers, power, transformers? They've been doing well. Will that continue, or are you seeing new themes emerge in the market if one has to play for the next 3 or 5 years?
Yeah, so the ones which are winning in this round, like auto or data center companies or capital market companies, so they will do well. But many more sectors like consumers and all, which were consumer FMCG and those things, they were very, very slow for last decade or so. But QSRs and I think all of them will pick up. You see some of the very surprising number is coming also from the consumption side. So my sense is this boom will spread in the economy as well as in the earnings. One has to keep watching where exactly it emerges, but the wealth effect will drive earnings of even consumption companies.
In some of the discretionary areas especially, right? So let's talk about some of the specific segments, Raamdeo ji. I have to ask you about the entire quick commerce space. I mean, you're an early believer, Raamdeo ji, and across the companies, you've been an investor.
Yeah.
A lot's happening.
Yeah.
Most companies are well capitalized. The newest one was trying to IPO, and I think, perhaps the plans got pushed out a little bit. I'm sure there will be discussion, debate, etc., which will come up with the conference. How has your thinking evolved, Raamdeo ji, across that segment?
I think the sector will keep growing beyond more than 50% for a few years to come, maybe 4-5 years. It will grow at about 40-50%, whereas the consumption itself will grow at about 40-50%. You see all the consumer companies, large consumer companies, the fastest growing channel for their distribution is quick commerce, and they are becoming like 30-40%, 50% of their entire offering. So some of the guys are saying that eventually in next 10 years, the general GT, which is our corner store, that will become say 50-60% kind of a thing, and another 35, at least 1/3 of the entire FMCG distribution will become quick commerce. And that's why not only our Blinkit, Zepto and Insta, they are doing well in terms of top line growth, but also Flipkart and Amazon, they are also putting their serious bets. So I think this segment is going to become much bigger. Now, when will they start making money? No, whenever new segment emerges in any part of the world, it takes time because the category building itself takes some kind of a capital loss, and that is what this sector is going through. And I'm quite sure the investors have to have some patience. And in the years to come, maybe another 2 years or so, or 3 years or so, they will start making some amount of money. And in 10 years' time, they'll make humongous amount of money. The beauty of this money, whosoever makes it, is that the return on equity, because the balance sheet is completely written off, there is nothing in the balance sheet. The ROE will be upwards of 100%. So I think the multiples for these companies, when you have 100% kind of a ROE and a growth of 30-40%, the P multiple could be upwards of 100. For the earnings of these companies. So, and they're truly FMCG in the sense that truly high frequency 24/7. So my sense is that yes, a lot of things will change, but this is a new category which is coming up, and we have. But making money requires you don't know when the stock will move. I know what is going to happen to the sector, but I don't know how much time you'll have to, what kind of patience you have to bring to make money out of this.
No, you're absolutely right. By the way, I have to ask you this, Raamdeo ji, were you surprised? With the Zepto IPO, there was, a pushback on valuations and what the ask was and what the market was willing to offer. Those things happen, but were you surprised, and how do you? Yeah, go on.
Yeah. All kinds of things happen because when the markets are not ready for particular type of stock, I mean, these are kind of things happen. But yeah, I mean, it is for the entrepreneur to figure out, I mean, what is the plan B and plan C, because that's the journey of an entrepreneur. I mean, always it happens that when you look for support from the market may not give, and when you actually don't look for support from the market takes you to the sky high. So yeah, I mean, those are part of the game. As an entrepreneur, you have to figure out your own journey, how you succeed.
Yeah.
Now, do you think, sir, valuations could be capped for these quick commerce companies because the third player, one of the key players, didn't get the valuation they demanded?
No, why should it be capped? The guys who are listed, they are climbing every day higher, and they are growing at 100%. So why should I mean, the guys who are listed, they are successful guys, so their valuation should climb up. And here again, because of internet-based trading, I mean business, the winner could have a very disproportionate takeaway from the market. So I think valuations of say Blinkit or what do you call Eternal could show the way for other companies' valuations.
Okay, got that. So that's one. Raamdeo, talk to us a little bit about the, again, something you've believed in for a while, right? I mean, the last time you were on, you were talking about the financial story, private banks which have done very well, right?
Okay.
And which have not done
Yeah.
which have not done very well, and you were saying that they are very attractive, but it needs a trigger. It needs a point where valuations turn into people willing to bet money on private financials, large private banks, basically. Raamdeo, what's your sense now as we speak this morning?
Yeah, this segment is one of the largest profit contributor to the Nifty and the entire corporate profits. And in last 25-30 years, it is one of the best story out of Indian corporate sector, starting from 95. And HDFC led all the way, and everybody's dream, every single guy who got the license, their dream was to become the next HDFC bank. So this is what happened, and now there is a for last 2-3 years, this leadership transition is happening. And I think they might be, I mean, these things are very painful, and I hope that they're the fag end of what do you call transition and merger and transition, I would say. And we should see the growth coming back. I think top line growth has already started coming in last quarter. At some point of time, I think even the bottom line growth will come. I have no doubt. Until then, markets will remain kind of a range bound for them. And meanwhile, even FIIs have been selling very aggressively in last 12 months, and those sellings will continue, we know. So that is what is keeping the sectors upward march despite this result, some kind of a cap. Because if the leader is valued at very attractive price, others will be benchmarked to leaders' valuation, and hence the entire sector will remain somewhat subdued, not getting the full flow of their earnings.
You said that, well, the trigger perhaps will be when profit growth starts to outpace loan growth, right? And for private banks, and maybe, as you said, we perhaps are closer to it. The other area in the financial services space is capital markets, which I think continues to do very well. And that thesis is there's no change, right? I mean, actually, at the beginning of the year, I remember, Raamdeo, one of our conversations, you were saying that the IPO, at that point, it was looking like after a hot 2025, 2026 will be a little thanda. But of course, it is not thanda, and there are lots of big IPOs, etc., lined up. But, I mean, it's not just about IPOs or primary market action, just generally, the capital market space doing very well.
Yeah. So, stock market is providing access to a lot of new companies, new enterprises, small and mid caps, even larger caps, even to the government of India through LIC and other PSU divestment. So I think there is an ample flow of money from DII or our retail investors across the country, across the time, and that is giving completely new fuel to the growth of the economy, growth of the capital market, and growth of all the constituents of the capital market. Look at the AMC growth, and last I think 10 years it has grown about 30% AUM growth, despite the fact for last year it has not grown. So you must forget about 30%, even at 25%, right now AUM is about 80 lakh crores. Even if it grows about 20%, we are talking about 400 to 500 lakh crores worth of AUM in next 10 years. So that's the kind of a gigantic, and the probability of this happening is very high. I mean, nobody can say for 100%, but I mean, this kind of expansion, and it will have a huge impact on the real economy. So I don't have any doubts the expansion of capital market, and it's a wonderful business with very little capital employed, but a lot of intellectuals required, a lot of relationships are required, a lot of trust is required. So it's a very different kind of business, and it is by far the biggest business in the world. I mean, the largest AMC in the world, they are having more upwards of $15 trillion under belt. We are not even $1 trillion for the entire nation. So I think we have a lot to see will happen in next 10-15 years. I hope we keep growing at about 7.5-8% and nominal of 11-12%, and you'll see the magic happening.
But AMC industry AUM, you're saying, I mean, it can grow at about 15-20%. That's the...
Yeah, AUM has grown about 30% in last 10 years.
Yeah. No, you're absolutely right. You know, the other area is this entire, which we've not talked about that much, but manufacturing, right? I know you've got.
Yeah.
And this morning there's this news of Reliance and Rolls-Royce, right? Tying up to try and make a jet engine, which is like right up there in terms of the engineering excellence, etc. required. So the manufacturing scene is buzzing. The private rockets in orbit and whatnot, lots of stuff. I know you keep a close eye, Raamdeo. What part, from an investor point of view, should one focus on within the manufacturing landscape? Many believe it's manufacturing exports, rupee is depreciated, you got a little competitive advantage because of that. Just your thoughts.
Yeah, I would think that still, because of geopolitics, the way it is happening and will happen in the years to come, I think the importance of manufacturing and consumption in India will have far more predictability than manufacturing and only exporting. I mean, howsoever strong competitive edge you have, even if it is a pharma or any other place, manufacturing is going to be extremely competitive out of India in the years to come, and even now. So we have a huge competitive edge, but the geopolitics is such that tomorrow anybody can shut the market, or they can put tariffs or things like that. So having a good mix of manufactured products consumed in India and also being exported outside, I think those kind of companies will do very well. But I keep hearing a lot of excitement in terms of new companies which are very global in character, and they're also coming from services side, not only from manufacturing side. And a lot of companies we are seeing who are actually American companies, and they want to manufacture only in India because the competitive edge, the technology, the R&D, everything is so much more affordable and doable in India. So I think what we saw in Infosys and TCS, where Indian cost American value or global value, I think that kind of thing should happen at a scale out of India.
Okay, Raamdeo, thank you very much for joining us. I know you have a session to go to. We'll let you go. Appreciate your time here on CNBC TV 18. Yes. It's always a pleasure.
Thank you. Thank you.
Okay, well, that's Raamdeo Agrawal, day one of the Motilal Oswal Global Investor Conference, with some perspective on what's top of mind, earnings certainly, the sustainability of some of these blowout numbers, as he called it, right in the beginning. And of course, I mean, some talk around sectors and themes that is on his mind. But, Reema, I think